Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, May 13th, 2022. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. The chart that we will be working off of today is a 30-minute candlestick chart of the S&P 500 that covers the last 20 days of trading. So each candlestick on this chart does represent 30 minutes of trading. And we're going to answer the question, are we there yet, on a couple of different levels. So stay with me here, and hopefully I can answer that question for you. So first off, the S&P 500 closed at 4023.89 today on Friday the 13th. Now, we had a nice little rally today. We were up 2.39% for the day, again closing at 4023.89. But for the week, we can see that the S&P 500 was down 2.41%. So we had a nice day today, up 239, but for the week, down 2.41%. And as we can see, the triple Qs down 236. Now, we won't be, a lot of us use the triple Qs, in various ways along with the S&P 500. So I wanted to put that in there. They were both down about the same. Actually, the Qs down 5 basis points less. We will just stay focused from a chart perspective on the S&P 500. Now, the all-time intraday high on the S&P 500, 48.1862. So right now, where we closed today on Friday the 13th, we're down 16.49% on the S&P 500. And we did put in a new low this week, yesterday on Thursday, May 12th, at 3858.87. Pretty hard to see unless you're looking at this on a larger screen, but I've got it annotated over here, 3858.87 right there, and that is the new low for this downturn. Now, interestingly, anything below 3854.89 puts the S&P 500 in a bear market. So if you look here, 3858.87, our low from yesterday and the new low for this downturn, basically 4 points above where we needed to get to reach a technical bear market on the S&P 500. Keeping in mind that a bear market is when you're down 20%. I know it feels like a bear market, right? And the triple Qs are in a bear market. We'll take a look at that here in a second. But the point is that technically a bear market on anything is when you're down at least 20% from its most recent high, right? The all-time high. Well, we're not. We're down 16.49% from the all-time high on the S&P 500. We're not down 20%, so we're technically not in a bear market. We are still in a correction. But yesterday, on May 13th, we basically got within 4 points, guys, of that number that we needed, 3854.89, to hit a bear market. All right, so right now we're 4.20% above that bear market number, but 16.49% below the all-time high of 48.1862, which was set back on January 4th. So, are we there yet? Well, no, we're not there yet on a bear market. We came really close this week, but we're probably, if we look at the question, are we there yet from a market bottom? We're probably not there yet either, guys. We're probably, we're obviously getting closer, right? And it shouldn't surprise us because now we've been down 6 weeks in a row on the S&P 500, which I don't have the charts on this, guys. I'm just going to, sprinkle this out there. But that hasn't happened for 11 years. The last time that happened was 2011. You can go out and look that up yourself. So it's a pretty rare occurrence when you're down 6 weeks in a row on the S&P 500. And the fact that we did that this week, down 6 weeks in a row now on the S&P 500, we should expect, right, from a statistical probability standpoint, that over the next couple weeks we might drift a little higher. And you can see here we got up to around 4308 and change a few times here in the latter part of April, and then up to 4307.66 right here on May 4th. Okay, again, if you're looking at this on a larger screen, you'll be able to see where my cursor is circling. So basically, let's call it 4310 for easy math. So, if and then of course we know from previous work that 4200 is kind of an area of support and resistance. You can kind of see that right here, even on this shorter term chart. So the point is, if we drift higher next week, which there's no way to know for sure whether we will or not, but if, right, we continue to get this relief rally that basically started today on Friday the 13th, and we drift higher, maybe we can get up to 4,200, up to maybe 4310. But as you can see here, we're probably going to run into some overhead resistance around 4308 and above. Okay, so we could drift higher next week, but keep in mind that we probably still have more downside to go. And this 3858.87 number probably, now guys, I can't predict the future, nor can anybody else. All right. But just understanding technical work, understanding traditional downturns, it would be unlikely that we come within 4 points of a bear market on the S&P 500, and that is the ultimate low. Is it possible? Of course it's possible. Is it probable? I don't think so. But again, that's just, from statistical probability standpoint, there's still a lot of things going against us out there. So more than likely, we'll go lower than what we saw here yesterday on the 1238.58.87, and we'll probably end up being in a traditional bear market down 20+% before this thing is over, guys. But so caution is advised, right? It's up to you, obviously, how you trade. But these are dangerous markets, and it's possible but unlikely that we've seen the lows yet on the S&P 500. So the question, are we there yet? Well, are we there yet as from a low of this downturn? Probably not. Maybe, but probably not. Are we there yet in a bear market? No. So far, we've missed it by 4 points. Okay? Now, let's move over here. We know, and just take a look at a couple numbers here. So we know the S&P 500 this week down 2.41%, triple Q's down 236. Now let's take a look at year to date to kind of see where we're at. Year to date, the S&P 500 down 1557. Okay, and we know here from the math that I ran, we're down 16.49% from the all-time intraday high, which was set at 48.1862 on January 4th. You guys can go look that up or look at some of my previous videos and you'll see that. But you can see just from the beginning of the year, the triple Qs, the NASDAQ 100 ETF down 24.01%. Of course, anything down more than 20 is in a bear market, so we know that the triple Qs are easily in a bear market, right? Qualifies for that bear market status. But the S&P 500 still is just a few points shy. So right now we're setting at about 4.20% above what we need for a bear market. Again, anything below 3854.89 on the S&P 500 would technically put us in a bear market. Do you have exposure to the S&P 500 or other large cap U.S. equities? Have you ever felt out of sync with the stock market? Would you like the opportunity to increase your upside capture, decrease your downside capture, improve your risk-return profile, and have the ability to sidestep major market downturns? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Would you like the advantage of knowing when it's generally safest and most profitable to be in equities, and when it's most dangerous and generally least profitable to be in equities? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage. Want to minimize the likelihood you will experience catastrophic losses in the market? To learn more, go to simplemarketsignals.com and watch this video that's on our homepage.